I do not have a USB-C. Amanda, you're on the show already, so might as well say hi.
Hello, people.
What is up, everybody? Welcome back to the Crypto Sherpa Show. I am the Crypto Sherpa who provides you the latest and current cryptocurrency news articles for what's going on in the space. That was Amanda, one of our consultants here at the Bitcoin Ben Crypto Club. And usually I do have a USB-C on hand, but not right now. We're going live. But welcome to the show, everyone. Hope everyone's having a great Friday. And now, what's going on in DC? We've been getting lots of words of stuff going down there this week. From Michael Saylor being pictured in Washington, reportedly to help advance the strategic Bitcoin reserves. That was 2 days ago. Yesterday, or was it yesterday? We had the golden statue of Trump holding a Bitcoin spotted in Capitol Hill. And then, as always, we got Dennis Porter of the Satoshi Action Fund, unlocking Bitcoin's potential, building digital asset policies for lawmakers and regulators. 9 bills in law and over 15 bills have been introduced. If you want to contact them, it's help@satoshiaction.io. But even he is helping out with just what's going on down there. He testified to a state committee on the importance of Bitcoin from inside the halls of Congress, where I was also meeting with congressional offices to discuss Bitcoin. This is what peak Bitcoin advocacy performance looks like. So yeah, lots of stuff's been going on in DC, getting a lot more clarity, getting a lot more rules. So this is really, really good. And have an article covering our Coinbase's CEO, Brian Armstrong. He was up at Washington, DC as well. And let's hear what he had to say about it. So this article is coming from Yahoo Finance and Coinbase CEO Brian Armstrong, this gentleman right here, look at that shiny cone head, has been culted this morning. But he believes that U.S. crypto legislation finally has a shot at passing after several days of meeting with lawmakers in Washington. Armstrong said that the Digital Asset Market Clarity Act has a good chance of getting done. In recent years, Coinbase is where BlackRock stores its BTC, while other U.S. exchanges like Gemini or Kraken are a literal who. Now, the bill seeks to clarify how digital assets are regulated, splitting oversight between the SEC, the CFTC, and other agencies. It focuses particularly on non-stable coins like tokenized equities. Now, this is how we ensure the crypto industry can be built here in America, driving innovation and protecting consumers, and making sure we never have another Gary Gensler trying to take your rights away, said Brian Armstrong. Now, Coinbase and Stand with crypto is regulation about to send Bitcoin to $150,000? I don't know, maybe. We are just in that time, and this just helps along. Adds fuel to that fire. But Armstrong also urged retail investors to join the Stand with Crypto initiatives, a grassroots platform that alerts users when to contact representatives. He framed it as a community-driven push, not just a corporate effort. Now, he said active participation would signal the lawmakers that constitutes, not just companies, want a clear regulatory framework. Amen to that, said Armstrong, as he argued that this is a pivotal moment for crypto's industry that could prevent another wave of hostile enforcement or unregulated scam chains like Terra Luna. Now, banking lobby pushed back over stablecoin yields. Should we be worried about this? So one of the sharpest battles could involve stablecoins. Armstrong claimed that the U.S. banking groups tried to insert language into the Genius Act earlier this year that would have banned yield-bearing stablecoins outright. Now, that attempt failed, but banking lobbies are still pressing lawmakers to curb interest-based stablecoin products. So why are they trying to make some changes right now? The law passed already, so they're just still not liking what happened. But crypto wasn't just on Coinbase's agenda. Lawmakers also met with 18 Bitcoin executives, including Michael Saylor of Strategy, formerly MicroStrategy, to discuss the Bitcoin Act, sponsored by Senator Cynthia Lummis. The proposal envisions the U.S. acquiring 1 million Bitcoin over 5 years using budget-neutral strategies like revaluing Treasury gold certificates and reallocating tariff revenues. Now, this has a good chance of getting done. It's a freight train leaving the station, said Armstrong. Now, bullish market data and why regulation could be the spark. Institutional data shows why this legislation matters. According to CoinGlass, open interest in crypto futures has climbed steadily in September, while DeFi Llama reports at least $290 billion in stablecoin liquidity is just sitting there on the sidelines. So there's a lot of bullish data that they're sitting on that they can make some changes with. But yeah, so Brian Armstrong was out there the other day, and he's very bullish. I saw some videos out there on X, him going there on both sides. They are interested now. So it is very likely we can push these bills through. And again, like Saylor is up there to get more word on pushing the Bitcoin Strategy Act. Let's start acquiring that 1 million Bitcoin here in the U.S. as a reserve asset. So yeah, lots of stuff is happening in DC. I am loving it, and I am really expecting a nice bullish next couple of months right now. Like I really feel alt season is just right upon us. But like we're probably actually even living it right now. So last chance to play that altcoin game. But again, the final goal is to always get more Bitcoin. So yeah, Bitcoin might not have that huge growth long term. Yes, it will. But if you're looking for right now, you may have to take on some riskier assets. But again, they're speculative while Bitcoin's strictly investing. So yeah, so that's what's going on with Coinbase CEO's Brian Armstrong. And I got some word yesterday. Like I was going, what's going on here? But NBA star Kevin Durant invested in Bitcoin back in 2016, but was locked out of his Coinbase account until this week. Back then, Bitcoin was just $650, and then now it is $117,000, up 180x. So when I saw this article, like I was going through the comments section, I was like, do people really not understand how this works? Like he was locked out of his account. He can just recover it. Like and these comments right now, I was trying to go through the comments, see if I can find how dumb people were, because this just shows you people still do not understand Bitcoin and crypto. Because when he said he was locked out of his account, I was like, that's just that's password recovery. Click forgot password or contact their support on the app and do the facial recognition, the KYC again, your account's unlocked. So when I was reading the comments, people are going, oh, that's a bad investment. Should have, what other things was he saying? They were saying in the comments, it was like, should have, like, oh, look, things aren't looking too good for Bitcoin. It's like, are you guys just dumb out there? Do you not understand it? So this is showing when I saw the comments on this post, it was just like, people do not understand how Bitcoin works still, or crypto in general, and exchanges. Exchanges, they're in full control of the crypto. They hold on to the private keys. So all you got to do is just recover an account with the facial ID and KYC. If it was in his own crypto wallet, on the other hand, that one would have been, as long as he has a seed phrase, he has full access to it. If he lost the wallet that it was in, it's like, oh, let me just download the wallet, put in the seed phrase. Oh, there's my Bitcoin. Hey. So again, there's still a lot of confusion and education that needs to go on in the community about Bitcoin and blockchain technology and how it works. And hey, if only there was a place to go to. Oh, wait, there is the Bitcoin Bank Crypto Club. So we're here educating the community around us, and we're opening up so many clubs. We have 5 right now, and at least we want 10 a year. So if one's not near you, this still shouldn't stop you from getting involved with the club, because we have so many different programs that we can offer you too. So if you need more information on that, go to bitcoinben.io or shoot us a text at 941-413-8080. But you do need to be a member to take advantage of these programs. But yeah, so we just need to educate the world still, and hopefully people, like, I stopped seeing the comments on here. I'm just thinking, oh, they probably felt dumb and removed them. But they got the account fixed. He got his $117,000 back. So Kevin Durant is good. Maybe you should put in a little bit more into that Bitcoin, because that would have been even bigger. So I just want to bring that up since we were talking about Brian Armstrong being at DC. But what else is going around, not just in Washington and the DC? We got some stuff going on in the states of America. So we got Michigan pushes ahead with a strategic crypto reserve bill. I believe they pushed it like a while ago, but it didn't pass. But now this one's getting revived, and it's looking a little bit bullish. So Michigan's crypto reserve bill has advanced to the committee stage, allowing 10% state investment in digital assets. Now, Michigan has taken the next steps for a strategic crypto reserve bill, which moved to a second reading on Thursday. The Michigan House Bill 4087, which would allow the state to invest in crypto assets under specific conditions, has moved to a second reading and was referred to the Committee on the Government Operations. Now, the legislation amends that Michigan's Management and Budget Act to establish guidelines for the strategic crypto reserve. Though it does not mention Bitcoin specifically, it comes amid a recent lull in developments around the state-level Bitcoin reserve. The bill was introduced by Republican Representative Brian Postumus and Ron Robinson in February, and would permit the state treasury to invest up to 10% of the funds from Michigan's counter-cyclical budget and economic stabilization fund in cryptocurrency. Now, the bill stipulates that the state must hold the crypto asset through one of 3 approved methods: a secured custody solution, which is a qualified custodian, such as a bank, trust company, or state-regulated company, or even exchange-traded products from registered investment companies. The state can also loan out cryptocurrency to generate additional returns if it doesn't increase financial risk. Now, the crypto reserve bill isn't limited to just Bitcoin. The bill also provides detailed technical security requirements for custody solutions, including exclusive government control of private keys, end-to-end encryption, no smartphone access, and geographically diversified secure data centers, the multi-party transaction authorization, and regular security audits. So it does not specify which digital assets can be used for the strategic reserve beyond this criterion, but digital currency in which encryption techniques are used to regulate the generation of units of currency and verify the transfer of funds, and so that operates independently of central banks. So they got a long list to abide by. But Michigan Bitcoin Trade Council is in opposition. The Michigan Bitcoin Trade Council has opposed the bill because there is no market capitalization number listed on this legislation that would prevent other cryptocurrencies other than Bitcoin from being bought by the state. Now, the state Bitcoin advocacy group claims that allowing other crypto assets to be part of a strategic crypto reserve would be creating unnecessary risks, as all other cryptocurrencies other than Bitcoin are centralized and subject to great risk. Here is the post from a Michigan Bitcoin Trade Council. Hello, Bitcoin laws. HB 4087 is not a Bitcoin reserve bill. The word Bitcoin is not mentioned anywhere in the bill. This is a cryptocurrency bill. The Michigan Bitcoin Trade Council does not support HB 4087, and this is a bill that enables the state of Michigan to invest in any cryptocurrency. Please visit our website for more detailed explanation. So, hey, I think they should put a market cap on this at least, so that way they know which coins can qualify for it. I don't think it should be strictly just Bitcoin, because Bitcoin can't do it all, but it definitely should be in there. It's like probably going to be the main one, because if they put a market cap on these bills like we've seen in the past, it's like usually capped off at like $500 billion, and that is only Bitcoin. So it's a crypto bill because it's trying to be inclusive for all, but it only would qualify for that one. Oh, and maybe even Ethereum right now. If we're looking at market cap right now, the only two that would pass $500 billion is Ethereum and Bitcoin. XRP would need to gain another over 300,000 to be a part of that. Tether the same, and everything beneath those. So those would really be the only two bills or coins that could be put on this bill. But again, the Michigan Bitcoin Trade Council does not approve of it because, again, there's no market cap, and they're probably also Bitcoin maxis. So all they want is just it's Bitcoin or none or nothing at all. That's it. But so far, with laws out there, with reserves out there in the states, only 3 states have passed the law. So Michigan now joins Massachusetts and Ohio with a strategy of a crypto reserve bill that have made it to the committee stage, according to the Bitcoin laws. Now, meanwhile, only New Hampshire, Arizona, and Texas have enacted legislation that enables state treasuries to invest in Bitcoin and crypto assets, and strategic Bitcoin reserve bills have been rejected in Montana, North Dakota, South Dakota, Wyoming, Pennsylvania, and there are still 17 other states with pending legislation, according to the Bitcoin Reserve Monitor. So here are all those states. So we have really only Texas and Arizona being the official ones. Let's see, New Mexico, Illinois, Michigan, and Ohio, and Maryland have some kind of Bitcoin. I think those ones, I think the blue, oh, here we go. Yeah, blue is pending, green has passed, Utah considered it, and red means they were rejected. So, But again, only 3 states can legally invest in crypto right now. But no, so that's what's going on in Michigan, though. It's getting pushed further, so we'll see what takes place. If it gets passed, I will definitely let you know on what goes down. Now, let's see, we are at 14. Let's continue with the news. So we're going to go over what is crypto mining and how does it work, because our next article after this one is pretty much, like I covered this in an X post that we saw yesterday, but Laos is considering using excess hydropower for cryptocurrency mining. Now, this is always the big question, though. What is crypto mining and how does it work? Well, it's like digging for gold. We're just trying to do analogies to try to make it visual for you. You're not actually digging with a pickaxe or anything. You're using computers to do it. But you're likely already familiar with gold mining. But what is mining for cryptocurrency? Well, crypto mining is how some cryptocurrencies like Bitcoin process transactions and mint new tokens. Mining for cryptocurrency is, by design, like digitally mining for gold. So let's explore the depths of the proverbial mine to help you decide whether to delve deep into the digital trenches as a crypto investor or remain safely above the ground. So what is crypto mining? Cryptocurrency mining uses specialized computing resources to add blocks to a proof-of-work blockchain. Now, adding a new block to a blockchain validates and records the latest batch of transactions and simultaneously mints new digital tokens. Now, the process of cryptocurrency mining is the work in a proof-of-work blockchain. Crypto miners use vast amounts of computing power as they compete to solve a complex math puzzle. Now, the fastest miner to solve the puzzle is awarded the privilege of adding the newest block to the blockchain. And then they also get to collect the transaction fees and the newly minted cryptocurrency associated with that block. Now, cryptocurrency mining requires substantial computing power, which is typically measured in hashes per second, also known as a miner's hash rate. Hashing is a cryptographic function that converts variable inputs like transactional information into fixed-length strings of characters or hashes. Now, crypto miners use specialized hardware, including applications, specific integrated circuits, which is the ASICs miners, and they use graphic processing units, GPUs, to mine these. Now, anyone with an internet connection and enough computing power to compete with other miners can choose to mine for cryptocurrency. Now, crypto mining is decentralized by nature, which supports the security of a proof-of-work blockchain. And you can learn more about decentralization public ledger in this article next up, or you can just go on YouTube and look it up. But again, like the hashing and like the hash and the hash rate is kind of just like a thumbprint. It's unique, it's individual. There's really no two alike it. And all these miners, these ASIC miners, are trying to solve that hash. Now, the higher the hash rate, the harder the computing power goes, but also the stronger the security goes with it. So when you hear like miners are producing X terahashes per second out there, those like terahashes or hashes are pretty much just guesses. So that's how many guesses a computer. So if you're running like a one, is tera 1,000? I believe so. So if you're, or mega's 100. I'm forgetting that, but like let's just say tera is like 1,000 terahashes. That is 1,000 guesses happening in a second because they're trying to solve this one hash that's unique and individual, and whoever solves it gets a privilege of adding that new block in the blockchain. So when you hear about like miners like controlling their hash rate, it's just showing like the educational guess or the amount of guesses that computer can do to try to solve it. It's kind of like rolling a giant 1,000 piece dice, and like you're trying to roll that one number that's like 200 or 100, but like you're trying to roll. It's hard to do. So usually the more guesses, so the more rolls you do, the more chances you have to solve it. So that's where the hash is coming to play. But how does crypto mining work, you may ask? Cryptocurrency mining is a complex process that requires sophisticated technical skills, but how exactly does it work? Here are the basic steps for using mining to process a pool of cryptocurrency transactions. So when you send a cryptocurrency, transactions are pooled for verification. New cryptocurrency transactions initiated but not yet completed are grouped into what miners call a pool. Each transaction consists of information about the transaction itself, plus a transaction processing fee. Now, unverified transactions are bundled into a block. Miners bundle together some or all of these unverified transactions to form a block. If many transactions are pooled and awaiting verification, miners may prioritize the transactions based on the transaction size, transaction age, or the associated processing fee. Now, miners race to solve a complex math puzzle with a block assembled. The race to mine the new block officially begins, and then miners use powerful computing hardware to solve a complex puzzle, which requires finding a specific number and nonce. Now that produces a hash when combined with the block's data. Now, the fastest miner broadcasts the puzzle solution. The first miner to find the correct nonce and create a valid hash then broadcasts that hash to the blockchain network, being the first to broadcast a valid hash. It is like a gold miner shouting "Eureka" during the California gold rush of the 1800s. Now, other miners verify the solution's accuracy. So the next step is for the other miners in the blockchain network to verify the accuracy of the broadcasted hash. So this is where consensus comes in about accuracy is achieved once enough miners, as defined by the rules of the blockchain protocol, confirm that solution is correct. So even though the miner solved it, it still needs to be approved by the other nodes and miners out there. Now, a new block is added to the blockchain. The miner who first broadcasted the correct hash processes the transaction in the block, resulting in a new block being added to the blockchain. Now, at the time that new block is added, all the block transactions are officially confirmed, and then new digital tokens may also be minted depending on how the blockchain protocols operate. Now, mining rewards are distributed. The miners who added the new block to the chain is eligible to receive rewards, which are promptly distributed after the block is added. Rewards may consist of the transaction fees and any newly minted tokens. So cryptocurrency mining is an innovative digital practice that can yield significant benefits and rewards, but that does not mean it's without its disadvantages. But let's also talk about the rewards a little bit. Like since Bitcoin was first created and its blockchain began, like whoever solved that first block and the first 210,000 blocks, because that's where Bitcoin's halving event comes in, these miners were awarded 50 Bitcoin at the time, which is a lot. And now the Bitcoin halving is how you control the supply of Bitcoin's creation. Like there's only going to be 21 million. About 19 million is in full circulation right now, so there's less than 2 million left. But yeah, since that beginning, whoever solved a block got 50 Bitcoin. Then every 210,000 blocks that were created, a halving event occurs. Now whoever solves a block after that point receives 25 Bitcoin. And that goes on for another 210,000 blocks, and it gets kind of half to 12 and a half. That's been going on. We just had our last one in April. So now, today's current day, whoever mines a block on Bitcoin's blockchain receives 3.125 Bitcoin. Now, the next halving, that'll be cut in half to 1.25. And then 4 years after that will be 0.75. So it's going to keep going down. But miners are rewarded, though, for also gas fees. So even if it gets too low, gas fees and transactions could pick up that load. But again, so let's continue on with cryptocurrency. Also has pros to cryptocurrency mining. Here's what to love about cryptocurrency mining. It enables blockchains to operate. Bitcoin and other proof-of-work blockchains rely on cryptocurrency mining to process transactions and mint new tokens. It supports the blockchain security. The decentralized nature of crypto mining can make a proof-of-work blockchain network extremely secure, and mining plays a crucial role in maintaining the security. It efficiently distributes rewards. Cryptocurrency mining supports an efficient mechanism for distributing digital rewards. Miners who successfully add the blocks to a blockchain automatically receive transaction processing fees and digital coins, and then it creates economic opportunities. This accessibility of crypto mining is creating new business opportunities for tech-savvy people around the world. People in regions with low-cost electricity can particularly benefit from mining cryptocurrency. Because when you mine Bitcoin, it's usually like, I'm thinking right now, it's like $50,000 to create that Bitcoin. And so it's a lot cheaper than buying on the spot market, which is currently, what is Bitcoin's price? $115,000. So mine a Bitcoin, I think if you're a miner, probably getting 3 Bitcoin. Like it's only costing $50,000 for the mining, the facility, and all the equipment you have with it. So it's cheaper to get new Bitcoin that way. Plus you're getting clean virgin Bitcoin. No transactions ever touched it. And some people do find that very valuable and could have a higher price than the current market price. Now, cons of cryptocurrency mining. Well, the practice of cryptocurrency mining has received substantial criticism. Much of it is well-deserved, but the negative aspects include high energy consumption. Yes, it takes lots of energy to do so. But again, if you're starting a mining firm, you're going to look for low energy areas. Like when I first got started in cryptocurrency and Bitcoin, I lived in California, so energy was very expensive, 20 cents like a kilowatt. So that does not benefit to be a miner out there. So these companies are using renewable energy, like we're seeing with Laos, or they're going to find cheap energy they can use, like even use flaring technology where oil companies, instead of they can't sell the oil, so they got to burn it in midair. Now they're using that technology to mine Bitcoin itself. It's why waste this energy? We can use that to mine Bitcoin and get some extra money. And then also some negatives to it is the equipment cost. Yeah, so purchasing equipment is very, very pricey. The high cost of becoming a cryptocurrency miner is often a barrier to entry. It's an environmental impact. Crypto mining is typically harmful to the environment because of the significant energy and equipment they required. I would have guessed as it produces too much heat, they make noise. I've seen many articles about that too. And then technology complexity. So yeah, crypto mining is technological advanced process that requires extensive knowledge of the hardware and the software. So you need to understand that. Diminishing profitability. The profitability of mining for popular cryptocurrencies like Bitcoin is generally decreasing, but competition among crypto miners is rising out there. So requiring miners to purchase even more hardware to continue to compete out there. And then the tax reporting challenge. Mining for cryptocurrency can create complex tax situations out there. So accurately reporting the mining rewards and complying with applicable tax laws, which vary across jurisdictions, may challenge the crypto miners. And then security vulnerabilities. It's the first time I'm hearing about these ones. Cryptocurrency miners may be vulnerable to different types of security risks, hacking of malware, cyber attacks, whatnot, and the operational financial risk. Yeah, it's very costly to get started in the crypto mining firm. So there's that risk, if it's going to pay off for you. Are you producing the right terahashes, exahashes, to mine the amount of Bitcoin you need to cover the cost? But the bottom line is many crypto miners would say that the best cryptocurrency to mine is the one that's the most profitable. And that may be true, but anyone who cares about the environmental impact of their crypto investment might consider avoiding proof of work tokens altogether. But hey, I don't know why they would. Proof of work's the most secure way, the secure token out there. So it actually exciting. As long as they have the amount of miners out there, the nodes, like proof of work is definitely the most secure way to go versus staking. So yeah, so bottom line, I disagree with that article. I agree Bitcoin mining is needed, and if you can take advantage of it, do so. If you can't run your own miner, but you want to be a part of it, again, that's one of our programs we have here at the Bitcoin Bend Crypto Club. So I think it does require, though, at least for you to have at least one Bitcoin to be a part of it, and like there's a whole process to that. So like you either borrow against the Bitcoin, that goes to the miners, and then you get paid for what the miners produce every single month. So, and then that can pay for the loan against the bar. So you still get to keep that Bitcoin. You're earning cash flow. So yeah, if you want to be a part or want more information about our mining program, give us a text at 941-410. Oh no, it's coming. It's coming. There we go. 941-413-8080. And we'll get you in contact with who you need to speak to talk about it. And I believe also we mentioned that we did partner too with, who are we partnering with? Is it Go Mining? I forget. So it's like if you can't afford that one Bitcoin, but you want to get involved with the hashing, like you're pushing an NFT hash, and then you're getting rewards on what those miner companies do. So we got so many things happening here at the club. I really encourage you to maybe stop by one of our crypto meetups here in Sarasota every Thursday at 6 o'clock. It's going phenomenal right now. We had a great one last night. Well, I gotta get pictures so I can share that on social media. But no, it was a great event. So if you're in Sarasota area and you're free on a Thursday night at 6 o'clock, come on down to the club. Like we are having so much fun just bringing the community get together, and they love what's happening. It's like, this is what I want from the clubs, just the gathering of knowledge and just communicating and also learning. Like since we're here, we can actually educate the group, because some of those meetups out there in the world, it's like they're just, hey, the meetup, oh yeah, I'm in crypto, let's have food. But we're here to actually even educate you on what you want to know. So yeah, if you're free on a Thursday night, come on down. But that is what crypto mining is. So now that we got that knowledge a bit, let's now talk about the Laos considering using excess hydropower for cryptocurrency mining. So they're bypassing the energy con of it takes a lot of energy to mine Bitcoin, or it's too costly because of their energy, but they're using excess hydropower. So they're using the renewable energy, so it's going to be cheaper for them. So Laos considers using excess hydropower for cryptocurrency mining, sparking investments interest in while raising social environment concerns. So Lao looks to turn excess hydropower into crypto profits. Lao is exploring the use of excess hydroelectricity power for cryptocurrency mining, sparking both international interest and domestic criticism, according to media reports. Now, the country's long-running dam construction program has created a surplus of electricity, while leaving Laos with billions of dollars in debt. So authorities are now seeking to monetize this excess energy through the energy-intensive crypto industry. So a report by the state-run Vientiane Times following a government meeting noted that policymakers are considering long-term economic opportunities, including digital asset mining, which could turn surplus energy into economic value. Now, critics warn of serious social and environmental consequences. Dams have disrupted rivers, reduced downstream harvests, damaged fisheries, and forced thousands to relocate. Okay, what is this? Greta Thunberg? Nah. But Vitum Permpong, let me see if I can actually say this name correct. So Vitum Permpong Sakarowan. So Permpong Sakarowan, there we go, director of Mekong Energy and Ecology Network, emphasized that the initiative is driven not by domestic need, but by debt pressure. Hydropower is also a seasonal thing. So during the dry season, Laos often buy electricity from neighboring countries, particularly Thailand, according to the Phnom Diets of International Rivers. And the promises to compensate displaced communities have largely gone unfulfilled, leaving many worse off. Now, economic ambitions clash with the social and environmental concerns. So despite criticism, the move has drawn attention from investors in the region. Laos aims to become a fully digital economy by 2030, licensing local crypto mining and trading platforms while attempting to regulate Chinese miners who moved operations to the country after China's 2021 ban. Now, in May of 2023, Laos unveiled a digital economy strategy for focusing on blockchain, AI, IoT, which is Internet of Things, and electronic finance. In August, state-owned electric Du Laos announced it would cut power to crypto farms due to the drought and export commitments of unpaid debts. So the risks still remain high. The International Monetary Fund warned in November that significant levels of public debt pose challenges to the medium term of the economic outlook, while inflation and a declining KIP, which has lost half its value against the US dollar over 5 years, added further strain. So is KIP their current currency that they have right there? And it's lost 50% of its value of the US dollar in the last 5 years. And just in the last decade, I thought I saw a post of like the US dollar lost its value by 10% in the last decade, or was it year? Might have been decades. So if they lost 10% and then this currency lost 5% of that currency is already devalued, yeah, they really should move into Bitcoin. Now, the situation is compounded by U.S. tariffs, currently at 40% on Laotian exports, among the highest for Washington's trading partners. So they definitely need to adopt this, and looks like hopefully they do. And yeah, so now we know about what mining is, why Laos is getting involved too. Just again, they're in debt, they need money, and why not use their excess energy to mine this amazing, scarce asset called Bitcoin. So that is our Laos Bitcoin mining news, and I think that's really all the Bitcoin news I have for you. So I think we'll take a quick break before we continue on. But I still want to, I'm still laughing at the Laos. Whenever I see Laos or Laotian, I think of the show King of the Hill with Kong Supanusaphone with his daughter Connie and Min, his wife. Oh my gosh, I always laugh at that. But hey, when I see Laos, that's just where my mind goes to. But that's cool that the country is getting involved with crypto mining, and hopefully it's Bitcoin. So yeah, let's take a quick commercial break. Blue FE, thank you for being on the show. Love having you here. Now let us take a quick break and we will be right back.
Want to connect with the world? Ready to be heard by millions? Have a talent you are ready to share or want to elevate your business to the next level? Step into the spotlight. Welcome to our all-new podcast studio at Bitcoin Ben's Crypto Club, Sarasota. Introducing a cutting-edge creative space built for everyone, from first-timers to seasoned pros. Outfitted with state-of-the-art cameras, broadcast-quality microphones, professional mixers, and premium acoustic treatment, this is where your voice isn't just heard, it's felt. Whether you're recording a podcast, live streaming, or creating high-impact video content, our studio delivers next-level production value. Lights on, mic hot, let's go.
And we're back. So yeah, what else is going on in the crypto space? I got some altcoin news for you. It looks like Cardano founder reveals behind-the-scenes plans for XRP and Ripple USD. So what is Charles Hoskinson, founder of Cardano, planning with XRP? We've already been getting tidbits of like just sneak peeks going on, like something's going on with these two coins out there in the past month. So let's see if we get a little bit more behind-the-scenes news. So speaking in a public X Spaces session on September 17th, Cardano founder Charles Hoskinson outlined a set of behind-the-scenes discussions and integration pathways aimed at bringing XRP and Ripple USD closer to Cardano's stack, describing a package for XRP that spans wallet support, DeFi execution layer, and standards-based route for Ripple stablecoins to deploy across multiple ecosystems. We've had a few calls with the Ripple USD team. We've talked to Flair. We've talked to John Deaton. We've talked to Brad Garlinghouse, and we've definitely had discussions with a variety of people from XRP's ecosystem, and we want to build a package for XRP. Now, Hoskinson said that framing the outreach as part of a broader cross-ecosystem strategy rather than a single bilateral tie-up. Now, Cardano's founder unveils plans for XRP and RLUSD, that's Ripple stablecoin. Now, on the product side, Hoskinson said that the plans begin with user-level access and extends into application deployment and liquidity. Lace Wallet will support XRP as one of the improved emergency support. He noted that adding that we have a DeFi layer for XRP that uses Midnight Cardano, so it's very easy to use XRP smart contracts and deploy XRP applications without requiring foundation changes to XRP's design. He positioned that approach as a way to let XRP developers ship without altering the XRP's ledger-based layer and architecture. Now, the Cardano founder also described exploratory work streams with projects adjacent to the XRP ecosystem. As certain XRP projects like Flare, we'd like to find a path to get them into the Cardano banking system. He said that, indicating that teams building on or around XRP could be onboarded to Cardano's infrastructure if technical and commercial conditions are met. Now, a separate through line in the discussion was Ripple's USDs, go-to-market design, and its sensitivity to the policy environment around stablecoin yields. Now, with Ripple USD, we talked to them starting last year, right when they announced it, said Hoskinson. They said that, look, we just got out, we just got our prices, it's been a long road, not a lot going on, so come back in a little bit and talk more deeply. And now we're on the other side of it, and I think there's definitely a path to have that conversation, Charles said. Now, he added that the team wanted clarity on where Genius was going to go because that would have a huge impact on the overall landscape of stablecoins in general. The reason being is that you know what you can offer a yielder with your stablecoin, and the answer is currently no from the Genius side. So that had to get passed, and now that that is passed, we're starting to think about their longer-term commercialization plans. Now, from an integration architecture perspective, Hoskinson advocated that Ripple USD avoid bespoke, a one-off listing, and instead adopt a standardized market-driven onboarding model. What we've advocated for Ripple with USD is for XRP and for Ripple to push for a self-serving listing model like Coinbase has with Rosetta, he said. Now, so they're basically create a framework, and then if an ecosystem is interested in supporting Ripple USD, then basically what they do is they just certify against the standard, and they'll do all the implementational work. And as long as that is done correctly, then they get a preferential consideration for where Ripple's USD gets deployed. Now, the rationale, according to Hoskinson, is to keep Ripple USD's expansion neutral and scalable across chains, while lowering coordination overhead. Now, after Ethereum and whatever you have to kind of think of is, okay, well, what's next? And there's 14,000 options, and they don't really want to be in business of picking winners and losers a lot. So you want to go with where the demand is. The desire is that you also want to have a lot of moving pieces you want to remove a lot of the moving pieces from the integration complexity, he added. Now, he also added that neither side is natively experts in the other architecture, so underscoring the need for open standards. The XRP team is by far not an expert on our architecture, so why would they be? We're very bespoke and exotic, and similarly, we're not experts in XRP's architecture as well, so we need to open standards and basically help people sort that out. Now, here is a post from Charles Hoskin yesterday on behind the scenes plans, XRP yield opportunities on Cardano with various integrations like Flare, talks with our team to get on Cardano. And if you want to listen to it again, that X Spaces show was yesterday, so you just got to follow whose account? Yeah, just follow the VET account, so vet_XO or X0. And you can find that Spaces if you want to tune into it. This is just a highlighted article of it. But in the process, Hoskin hinted that Cardano would make the first technical move where appropriate and only then discuss commercial terms. Now, if an ecosystem is interested, we have to make the first move. We make that first move, and then after doing it, enter commercial negotiations to figure out the next step after that, he said. So it's still just a working piece, but this was just a little behind the scenes of what's going on with Cardano, XRP, and I guess Ripple USD. And this is the first I heard about that one. Now, what other news do we have in the space? Looks like Ethereum sets its December 3rd for the Fusaka hard fork launch. So it looks like Ethereum's getting another hard fork. I wonder what it's going to entail. So Ethereum schedules Fusaka hard fork for December 3rd, 2025 with phased testnet rollouts, blob capacity upgrades, and a $2 million audit competition. So the testnet rolls out and network enhancements highlight the upgrade. So Ethereum developers have confirmed the Fusaka upgrade launch is scheduled and set to go live on the mainnet on December 3rd, 2025, following a series of testnet deployments. Analyst Christine Kim shared the update after the weekly all-core developers consensus call. And here's a tweet from Christine Kim. It's an important decision we've made on today's Ethereum developer call, the ACDC number 165. Developers confirmed the public testnet schedule and the BPO hard fork schedule for Fusaka. Let's get into it. Now, its important decisions were made during the call, including the public testnet launch and the BPO hard fork schedule. So according to the plan, the Fusaka rollout will proceed as follows. We have Whole Sky on October 1st, Cipolla on October 14th, Hoodie October 28th, and then the mainnet hits on December 3rd. Additionally, block capacity will increase in 2 stages after Fusaka's activation. So first week from 6/9 to 10/15, and the second week up is 14th to the 21st. Now, Fusaka will follow the Pectra hard fork, which was successfully activated on May 7th, 2025, including 11 Ethereum improvement proposals, and described it as the largest deployment since the merge. Now, Ethereum Foundation has been preparing for this. The Ethereum Foundation is actively preparing for Fusaka's release. On September 15th, it announced an auditing competition on the Sherlock platform with a $2 million prize pool to identify code vulnerabilities before the mainnet launch. Now, the 4-week competition aims to ensure the upgrade is secure and reliable. They gotta make sure no one can hack into this. Now, at the same time, changes to the testnet infrastructure continue. Whole Sky will be deprecated in 2 weeks after Fusaka's installations due to technical challenges during the Pectra deployment. Now, Fusaka is expected to enhance the network scalability and the gradual increase in block throughput, which will lay the foundation for future upgrades, including Glamsterdam, which is already planned for 2026. So this is just another upgrade happening to Ethereum's network. So always more improvements, fun challenges that happen, and yeah, let's see how they can scale the network even further. Now, what other news do I have here? I got 2 more news articles for you, but looks like Curve Finance's community have voted on a $60 million proposal to make CRV a yield-bearing asset. So, I literally did just buy this token this morning, so not financial advice. I'm taking that risk on it. But the new yield basis would allocate 35 to 65% of its total value to holders if they voted escrowed CRV. Now, about an additional 25% would be reserved for the ecosystem. So the Curve Finance Decentralized Autonomous Organization is voting on a proposal that could open up new income streams for the protocol and its ecosystem. The proposal, introduced in August by founder Michael Egorov, would establish a $60 million credit line of CRV USD for yield basis. Now, voting began on Wednesday with a 97% of votes cast in support of the proposal at the time of writing, and under the yield basis, holders of the CRV who stake their tokens would receive VCRV, the vote escrowed ZRV token, in return. And so essentially creating income for stakers, and the yield basis were to return between 35 and 65% of its value to the holders of the VCRV, while an additional 25% would be reserved for the ecosystem. Now, Egorov said that the credit line would be enough to create pools for 3 assets: Wrap Bitcoin, Coinbase Bitcoin, and TBTC. I'm not sure which one that one is. But in order to get more incentives for Curve ecosystems, as well as to pay a fee for having Curve technology powering its core, yield basis makes an allocation equal to 25% of the YB, which yield-based liquidity providers are getting Curve, Egorov's wrote in proposal. Now, the yield basis is said to tackle the problem of impermanent loss by borrowing and making a supply sink at the same time. Therefore, the total value locked in debt and yield basis can scale up to any size without affecting the CRV USD peg negatively, said Egorov. Now, the impermanent loss occurs when the value of a digital asset deposited in the liquidity pool falls more than the asset that were held outside of the liquidity pool. It can happen due to liquidity pool rebalancing and other factors. Now, Curve Finance is a player in decentralized finance and had a $2.4 billion total value lock as of Thursday, according to the DeFi Llama. However, the total value lock has dropped considerably since January 2022, when its peak was around $24.2 billion. Now, the protocol has struggled against attackers, suffering multiple domain name service attacks, the appearance of fake Curve financial app, and yeah, so negative news right there, but I wonder if they can get by it. I'm taking that chance when I bought that coin. I'm full okay with this coin going to 0. And so any coin that you guys get into that's not Bitcoin, really just consider if it goes down to 0, you gotta be okay with it. That's just it. It's not reliable. It's not secure. Bitcoin is probably your safest bet if you're trying to preserve your wealth out there. So that's why Bitcoin is an investment and not just a speculative asset anymore. So if you're getting into any of these altcoins, they're speculative assets. It's a gamble. If it goes up, awesome, we won. I'm just going to put that into Bitcoin to really win. If it goes down to zero, I'm okay with that. So again, never do what I do. I'm letting you know what I do, but again, I'm never going to tell you what to do. And also, I'm never going to give you a phone call out there. So if you ever get a fake phone call from someone claiming to be Sherpa, that's not me. I will never do that to you guys. And nor would Bitcoin Ben, Jay Bose, Bitcoin Ben Crypto Club, like any influencer out there. It's like, I feel like I always got to retell people about that because that scam goes out there so much and some people fall for it because the scammers present just stress and urgency. Oh, there's something wrong with your wallet. Go here, send me your seed phrase, do that. So no, so I will never call you or do any of that. And I will also just tell you guys, like, I would let you know what I get involved with some projects, but I would never recommend you do the same thing before you do your own research. If you want to get involved with it, take that chance, go for it. But in the total, the final goal is always Bitcoin. How do we get more Bitcoin? Because that's the true scarce asset out there. But looks like DeFi is rising in 2025 as a sector of crypto, and decentralized finance has been rising in 2025 after a significant lull period between 2022 and 2023. Now, across all protocols, the total value locked is a measure of DeFi health. If it had risen to $163.2 billion on Thursday, which is up from $115 billion on January 1st, that's a rise of 40.9% in almost 9 months. Now, Aave, a DeFi protocol with $42.5 billion in total value locked, has been making moves in the space. In August, it went live in the Aptos ecosystem, a blockchain with few competitors to the DeFi giant, and Aave is also working on a new version set to go live in the coming months. Now, Athena has also experienced momentum, with the synthetic stablecoin receiving attention after the Genius Act was passed in the United States. Now, it crossed the $500 million in revenue on August 2025. So DeFi is rising this year, and I think it's going to continue to rise. But that's what's going on with Curve Finance and their community vote on what's going on. So hopefully it's bullish news for the token I just got. But that's what's going on in this space. Then lastly, just letting you know that the Mask token is coming, and Consensus CEO says MetaMask native cryptocurrency is on its way. So there's been some articles out there before saying like, no, we're not going to have a token. We're not doing this. But I guess now the Consensus CEO Joseph Lubin confirmed that the block, that MetaMask's long-awaited native asset, is coming, and it may be sooner than we think. So I wonder how soon. But Ethereum co-founder and Consensus CEO Joseph Lubin said that MetaMask will be launching its much-anticipated native token in the near future. The Mask token is coming. It may be sooner than you think. And Lubin said during an interview on the Block's Crypto Beat podcast, and it's significantly related to the decentralization of certain aspects of MetaMask's platform. Lubin explained that Consensus is actively supporting the Ethereum ecosystem's direction of progressive decentralization. And that is using MetaMask, Infura, and Linea to ensure that rigorous decentralization remains at the center of the ecosystem. And for years, the crypto community have been closely watching whether the most popular Ethereum wallet will launch its native cryptocurrency, which is an idea that dates back to at least 2021, when MetaMask engineer Eric Marks suggested the concept of community ownership of the wallet through a token launch. Now, in a May interview with the Block, MetaMask co-founder Dan Finlay said that the token, if launched, would be advertised directly in the wallet. So you'll be able to find a link directly in the wallet, Finlay said. Now, while Finlay said at the time of the token launch, it's still a maybe, Lubin's comments on the Crypto Beat on Thursday indicate that the Mask launch plan is concrete and near. So earlier this month, Consensus Ethereum Layer 2 Linea launched its native asset Linea, and with a token generation event that distributed over 9.36 billion Linea to eligible addresses. Now, with the token launch, we had the opportunity to do some pretty impactful things, Lubin said, pointing out that Consensus took a modest 15% stake in Linea tokens, while the remainder was allocated to support builders of liquidity provisions and incentivize users for both Linea and Ethereum projects, prioritizing community growth. Now, the MNAV concerns. So meanwhile, Lubin, who is also serving as chairman of publicly traded Ethereum treasury company SharpLink Gaming, he commented on the company's latest performance. The company's market net asset value ratio recently fell below 1, indicating that the market value to the company at the discount to the ETH the firm holds, according to the Block's crypto treasury page. Now, SharpLink's market net asset value currently stands at 0.80x, which is a similar decline in the MNAV, which is spotted among other crypto treasury companies such as Bitmine and Mara. Now, this trend can erode investors' confidence and has raised concerns about potential death spirals, where the company's stock price falls dramatically and then limits its ability to raise capital, especially for a company heavily reliant on volatile crypto assets. Now, there are cyclical things that are happening in the world too. There's a secular trend, Lubin commented, when we see the price of Ether surge, we also see that reflected in SharpLink. As we see their price of Ether moving back towards all-time highs, we're going to see animal spirits back in the market. SharpLink CEO Joseph Cullum, also presented at the podcast interview, added that the MANV decline below 1 is just temporary dislocation. This is a public company's vehicle. You own the underlying Ethereum. You get to stake it and earn 3+% yields. That staking yield is revenue, and in the public company's context, in the midterm to long term, that should attract multiple, explained Cullum. Now, the future of the ETH treasury right now. In the case of the MNAV stays below 1, SharpLink CEO said the company will opt for further buybacks while seeking other ways to raise capital in the market, such as issuing common stocks. Now, there are equity-linked and convertible offerings that have really significant investor interest where you can raise that capital without diluting the shareholders, Kalam said. Now, instead of focusing on an MNAV, the two SharpLink leaders put more emphasis on their own metric, ETH per share. Kalam said the ETH per share ratio has grown from 2.0 in early June to 3.95, which is a super positive for investors. So it's about more and more investors waking up to the idea that we are going to be using our Ether, Lubin said, and we may borrow against it at some point in the distant future when it's a giant pile of high-powered money. We'll be staking it in important protocols, we'll be bringing liquidity to new exciting protocols, and when the company reaches a certain inflection point that possesses a limit for further Ether purchases, SharpLink plans to substantially change its mode from Ethereum accumulation to making use of Ethereum. Now, according to the block's data dashboard, SharpLink is the second largest corporate holder of Ethereum with around 836,710 ETH under its belt, and its stock closed up at 0.58% to $17.22 on Thursday, according to Block's SBET price page. So that's what's going on with... Oh, that took on with MetaMask. That totally led off. I thought I was covering an Ethereum article for a second. It pretty much is. But MetaMask is coming out with a token, and it may be sooner than you think. Well, I get it. I don't know. I need to learn some more tokenomics about it. Make sure that the owners don't own a big supply of it. See how many tokens there actually will be. What's the creation like? So there would be a lot of things for me to consider, not just go straight off the hype out there. But that is it for all the news I have for you guys. Bitcoin is currently sitting at 115,000. Our Fear and Greed Index is at 51, neutral territory, and alt season is still at 74. Let's see, Ethereum's at 4,400, XRP is at $3 flat. So prices are kind of just holding steady still right now. But we may see some bullish moves over the weekend because crypto never sleeps. It's unlike the banks, which close at 6 o'clock on Fridays and maybe open a similar amount of time on the weekend. But with crypto, we can still see moves over happen the weekend because it's not like the stocks too, which shut down on Fridays. Like crypto is moving 24/7. And so we may see some price movement happen just because, again, it takes time for a catalyst to take wave. Like, again, we just got that interest rate cut. The Fed, and so yeah, it wasn't going to happen instantaneously. People were speculating it, watching what happened, so their moves and decisions might happen over the weekend. But that's it for the news, guys. Hope everyone has an awesome weekend. If you're in Sarasota tonight, we got poker tonight, so I'll see you at 6. It's always fun to play some games. So everyone have an awesome weekend, and I will see you on Monday. Peace out.
Tired of jumping through hoops to buy Bitcoin? Frustrated with endless paperwork and invasive identity checks? Introducing Bitcoin Ben Crypto Club's loan program. No KYC required. Say goodbye to the hassle and hello to freedom. Borrow up to $250,000 at as little as 7% interest. Join our community and take control of your financial future. Bitcoin Ben Crypto Club, where privacy meets opportunity. Connect with like-minded individuals and grow together. Visit us today and unlock your $250,000 Bitcoin loan. Your journey to financial freedom starts here.